Welcome to the Business Finance Bulletin, episode 220. Welcome again to the latest Business Finance Bulletin. With me, Rob Warlow from Business Loan Services, the commercial finance experts. In this bulletin, insights on angel investors supporting growing businesses, funding circles' impact on the UK economy, and business demand for finance remains weak. Let's start this week's bulletin by taking a look at a little used source of finance, namely angel investors. Now, angels are typically business people who have built up a successful business, exited, and now want to use that cash to invest back into the economy by supporting fast-growing businesses. They don't only bring cash, of course, they bring skill sets and knowledge, something that many fast-growing businesses lack. So what do these angel investors look like? Well, every year the British Business Bank, in association with the UK Business Angels Association, carry out an annual review of the market, and their 2018 report has just been released. The report reveals, for example, that 56% of angels say they have now been an angel for 5 years or more, so they're beginning to really understand the market. 40% of them say that they typically remain invested in a business for 6 years or more, so some good long-term stable capital being provided. In terms of age profile, 75% of them are aged 45 years or higher. Well, so again, lots of grey hair and knowledge around the table. In terms of the average amount invested, well, that's £25,000, and 79% of them are actually part of syndicates, where you've got a group of angels pooling their money together. So what are they looking for? Well, perhaps not surprisingly, 93% of them have said that when they're assessing a case, they're really looking at the business owner, the entrepreneur. You are the one that will make or break the business. So make sure you present yourself really strongly with a good, strong CV, emphasizing your experience if you want to get angel investors on board. So we are a great insight into the angels market. Could that work for you if you're looking to scale your business up? When it comes to financial institutions lending money, it's not often that they step back and wonder what positive impact they've had on the UK economy. Well, that's one question that's been posed by Funding Circle. Now, Funding Circle are a peer-to-peer lender. They provide debt finance to growing businesses, and they provide loans ending from 6 months up to a maximum period of 5 years. Amounts start at £5,000 and, under certain circumstances, up to a maximum of £500,000. The Funding Circle was established in 2010, and since then they have lent out approximately £3.4 billion. So what has their impact been on the UK economy? Well, they've teamed up with Oxford Economics to ask this question. Now, the impact has come in a number of different ways. Firstly, a direct impact. They've been providing funds to businesses to buy plant and machinery, invest in working capital. All of that is a great positive impact. Secondly, there's an indirect impact. Obviously, those businesses that are spending money in the economy further down the supply chain. And thirdly, employees. They're creating and safeguarding jobs, and as a result, those employees go out, pay taxes, spend, contribute to the economy. So what's this impact been? Well, Funding Circle estimate that in 2017, in terms of the businesses they supported, they safeguarded and created 45,000 jobs. They added £2.4 billion gross value to the UK economy, and in taxes, £700 million was paid. So it's great to see a business like that stepping back to think what impact that they've had on the economy. So if you want to know more about Funding Circle, perhaps what they can do for you, just drop along their website, which is fundingcircle.com. Or alternatively, drop us an email, info@businessloanservices.co.uk. In the previous two segments, we looked at the fact that businesses who are in need of finance go to the likes of Funding Circle and angel investors. But what is the demand for finance like amongst UK small businesses? Well, the latest monthly report is out from the SME Finance Monitor team, and they regularly speak to 5,000 business owners about their experience of raising money and their thoughts around debt. The latest report for the 3 months to April 2018 is out. The report has revealed a startling figure that 52% of businesses now classify themselves as permanent non-borrowers. These are businesses that say they have no interest in borrowing at all. So that's more than half of UK businesses. That doesn't augur well for the economy, because obviously organic growth is fine, but sometimes in order to get a real growth spurt, you need a bit of borrowed money in order to leverage the business up. In terms of use of external finance, only 33% of businesses are now using external finance, and that's down from 35% in 2017. So we can see businesses are definitely being a bit more cautious. However, it's not all doom and gloom. 47% of business owners said they do have growth ambitions. So they are planning the growth. Problem is, they're just not fully committing to it. But hey, at least the ambition is there. So really interesting insights there into how UK business owners are thinking when it comes to borrowing money. Well, that's it for another bulletin. I hope you enjoyed it, and please, if you did, don't forget to give it a like and a share. So that's it. Look forward to being with you next time. In the meantime, have a great, successful and profitable week.